130, okay? So that means even if you take your trade, so that means even if you take your trade right now, you should still have stop loss and take profit under your trade, okay? Okay. So if you look at this very carefully, you discover that on the 15 minutes time frame, the market is currently rocking a very local, or if you like, a very small level of support there, right? So that's a small level of support. And that support becomes the market have been able to take out the low of yesterday, right? The market have taken out the low of yesterday. So the area I'll be marking out for you are areas where one can be able to take trade, okay? So they are just areas of support. So if I should extend, if we extend this backward, you will see that this level has also been tested before, right? So the market tests this level, tests this level, tests this level, tests this level, and now it has done the spring. So a spring is simply when it has not traded and traded below all of the areas where it has tested before. Okay. Then so this area is a good area for for us to take our buy trade, right? So another good area is this area. So this is how you mark your charts. So when you mark your chart like this, then you go into the waiting game, right? Waiting for the price to actually get to these areas where you are marked. So this is another lovely area, right? Another lovely area. So these areas on my chart are areas where one can be able to take a trade, okay? So that means one can take one from here. So what if it dips further? Another trade can be taken from here. So if you use your Fibonacci to validate this point, Fibonacci and draw from this low, okay, or we can even use this low, okay? Let me see whether that low is a valid low. So if we use our Fibonacci and draw from this low all the way to this high, so we can see that this particular level is our 61.8 level, this is our 50 level, and this level is around our 78 level. So that makes it very valid, right? Remember, the market always like to retrace before moving in the same direction, okay? So these are the levels that we're looking at. So, but having done this, having done our Fibonacci, among all the levels we saw, 61.8 seems to be the strongest level, right? 61.8. So that means this particular area seems to be the strongest level for us. So that means we like to wait until the price tests this particular area before. So let me change it there. So among this area, the blue one is actually the strongest level, okay? So if the price gets there, one would like to take a buy, then of course you may want to use the opening price of yesterday as your stop loss. And of course, you may want to target the high. That means we want to target this high. So we are simply trading by the market structure, right? So we are simply trading by the market structure, except for fundamentals that may just disrupt. So guys, that will be for Euro USD. So this area, it becomes our POI or AOI, our area of interest there, okay? So guys, we are having an area of interest, which is the blue area, okay? Blue area becomes our area of interest. Then let's look at what's happening to GBP USD. So this is GBP USD. So GBP USD on the H4 time frame, guys. This is also another powerful upward trend, right? But the market has gone up very much. Hey, this type of upward at this particular level, let's see H daily time frame. So this is January, this is February, this is March. So if you look at from January, February to March, for this year, that is the all-time high for this year. Hmm? So for this year, the market is rocking an all-time high for this year. So that means that high price is really, really very high. I can tell you that. So the market would like to do some level of retracement. So we're expecting some level of retracement there. So if you look carefully, this is a very beautiful upward trend. These are the relatively equal highs that the market will always like to crush. And guess what? The market did crush it. So remember I said in order of our money market review, whenever the market creates a relatively equal highs like this in the direction of the trend. So before this relatively equal highs, what was the trend? The trend has always been up. So before this relatively equal highs, look at it, the trend has been up. So if the market creates relatively equal highs in the direction of the trend, it's always a magnet. That means the market will be attracted to that level. So guess what, sir? The next time the market moves up, it crushed this highs to form a new high. So that means there is a lot of liquidity. Actually, those liquidity are target liquidity. There's a lot of liquidity resting above these highs, and the market did actually crush it. So the market crushed this high to form a new high. Then, of course, the trend also continues, right? So, this particular model can be your trading model. Going across all the financial instruments, looking for relatively equal highs in the direction of the trend. Now, your win rate will shoot up. But one thing it will do is that it will reduce. So one thing it will do is that it will reduce the number of trades you take because you not always see it. But whenever you see it, it's a sure one. So this is the type of short trade that you may want to even use your house rent. you may want to use your house rent to enter once under load, guys. And most of the times, up to 90% of the time, it works. Whenever you locate relatively equal highs, and those highs are in the direction of the trend. Like recently, we saw it working in gold, right? So then, of course, the market did a retracement here. So if you're doing market structure analysis, this upward trend, guys, we may see some surprises. So I'm trying to push some surprises, pushing the market downward during the news hour. But guys, now we always analyze what we see on the chart, right? So what we're seeing on the chart is an upward trend. Upward trend. Let me ask you, sir, even by yesterday, just cast your mind backward because technical analysis is the analysis of the left-hand side. So left-hand side, looking at left-hand side, this is today, left-hand side is yesterday. So looking at yesterday, when we have not seen all of this, yesterday, the market was still on an upward trend. So if you place a buy yesterday, you would have still made some profits, right? Now, yesterday, the market did a retracement to this level, bounced off my 50-period moving average, and of course, was able to take out this high to form a new high. So the market did a break of structure yesterday, form a new high. So for today, we are expecting another break of structure, right? Unless the market is able to take out this order block. So there's actually an order block around here, right? A very strong one because the market came back to test it. So the market ran away from this level, came back to test and zoom off. So until the market breaks this level, obviously we are still going upward, okay? Until the market breaks this level, guys. So let me change the color. So until the market trades trade below this my level here, the market is still going upward, guys. So we'd like to see the market trade below this level. If not, we are still going upward. So the market may want to use this level as a support, right? Because it has done it before. It has used it as a support yesterday. So it may want to use it as a support. So it means if for today you see the market break this level, right? Now don't forget this analysis. You may want to screen grab your phone, okay? so that you can get this. If for today the market breaks this level, okay, you should be selling. I mean, if the market trade anywhere below this area, then you should be selling, right? If it breaks this level, then you should be selling. Otherwise, you're going to use this as our support. So for today, what do we do? Or for now, what do we do? Wait and see the market reaction on this particular level. Wait and see. Now, even though right now we know there is a mini support level here, but that level is a small one, and of course, it's very early to bank on that support. It's very early. It may just be very early to bank on that support. But the, 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 the Euro session is just beginning, okay? So the market might smash that one. But for this one, it's a stronger one. It's a stronger one. Okay? So the market may just obey this one and do something like this. It may just obey this one and do something like this and move up straight to smash this high to form a new high. To smash this high, to smash this high to form a new high, something like this. Otherwise, but if it breaks this level, maybe during the news, then of course we'll be having a big fall. So that's Euro USD USD analysis there. So what are we doing right now on GPUSD? We are just doing some waiting, okay? We are not jumping in, we are doing some waiting. So let's look at which other instrument. So if you have another instrument you have in mind, you can just drop it. Otherwise, I will go straight to gold, right? Okay, but let's do GBP JPY, okay? So what is JPY doing for us here? JPY has been on a range, right? It has been ranging. So this is the range. So it's very important for you to draw out these things. It enables you to see the bigger picture. Take this from me. If you have been analyzing the market on your phone and perhaps you feel you have not been doing well, okay, one of the things you need to do right now is to always switch your time frame. Always start from the H4 time frame, number one. Then keep your phone on a landscape position, not portrait, such that you can be able to see a lot of information. So the market, so JPY has been on this kind of we call it a ranging market. So it's testing this level again, right? So it has tested it 1, 2, 3. Yesterday it went to test it again. But what we can see from the immediate price action, we can see that the market is gaining momentum and pushing to the upside, right? So we can see highs are getting higher, which are the tenets of an upward trend. So this high is higher than this high. This high is higher than this high. What about the lows? The lows are equally getting higher. So we are looking for a buy opportunity here. Buy opportunity. So while looking for buy opportunity, so let me look at for some areas where I think the market may want to observe okay? So this area is one of them. So this is one good area I think the market may want to retrace from, okay? And of course, push upward. Remember, you need discounted price for more momentum to be gained on the to move to the upside, okay? So the market is trying to offer us some discounts, right? So this morning it has moving that it moved downward the last 4 hours, and now these 4 hours is trying to move downward, as you can see there. So let's switch over to H1 time frame and see what's happening there. On the H1, it looks something like this, right? So looking for a buy opportunity there. So if the market falls inside this area, guys, I would like to buy. If it falls inside this area, I will buy. Then my stop loss will have to be just around this low. buying somewhere around inside here. Then take profit, we have to be take profit, we have to be at this very high here. So that gives you a trade of almost 1:, maybe up almost 1:4, 1:5, right? That's a good trade. So you buy here, you put your stop loss very close here, then of course you take profit at the high here. That's for GBP, JPY. So let me check the comment section and see the instrument you would like us to analyze. Okay, you want us to look at US 2000. So the first one there is US 2000. But before that, let's do gold first now. Let me go through my list. I have a list. So let's look at gold right here. Gold first, okay? Remember, we said gold is heading towards 3,000, right? Don't forget that statement. We said the gold is heading towards 3,000. Gold is going to 3,000. So since gold is going towards 3,000, now gold would not like to show you all of its card, all of the card that it needs to get there, okay? Let's look carefully on this gold again. Now, the trend is still upward trend, right? And so we have a level of relatively equal highs here. This is a relatively equal highs that I think the market would like to come and smash. So this is 3 weeks ago. 2 weeks ago, we had this relatively equal highs. So the market would like to come and smash this high, guy. So look out for this high. If you have placed a buy, if you want to buy, right? So this is one good area where you may want to come and take a profit on a swing trade, okay? On a swing trade. So that is so guys, take note of this level. Take note of this level. Take note of 2954, right? 2954. Take note of 2954. So gold will be heading towards 2954, 2955. So maybe before the end of this week, right? And it's just today and tomorrow. So these two areas, so this is one area gold we need to cross before it gets to that our lovely 3,000. So looking at the analysis for today, so let me now I've showed you another relatively equal highs. Another good area. Now, if you're on the buy, you want to hold that buy until it gets to that level. But if you have not placed a buy, let's look at areas where one can be able to enter a buy. So let's look at H1 time frame, what it looks like. So I am still looking for opportunities to buy, only to buy, opportunities to buy. Not to sell, opportunities to buy. I know opportunities to buy means the market will have to do small retracement. So from the left-hand side, this is actually a level where I think the market would like to bounce off from, okay? So this is another area again. Then, okay, this one is too big. Then I'm seeing a fair value gap right here. Guys, there's a fair value gap here. And this is a very sweet one. Why? Because it's the three candlesticks that forms the fair value gap are all bullish candlesticks. So fair value gap works better when all of the three candlesticks. Now, fair value gap is a three candlestick pattern. Now, those three candlesticks should be the same type of candlestick. I mean, all bullish or all bearish. Okay. Yeah, we have all bullish, first bullish, second bullish, third bullish. So inside here is the area. So I might even forgo this one. So this one can even go, okay? We might work with this one. Okay, so this is one good area I think gold will need to come down to before bouncing off and of course straight to the upside. Okay, so this is it. So you wait until the price gets inside this area before you want to do a buy. Or do you want to enter a sell right now? Let me see your hand up if you want to enter a sell. Or you want to enter a sell. If you want to enter a sell, they want to quickly scalp it, right? But I like to scalp in the direction of the dominant trend. So right now, the dominant trend, okay, AY, you want to scalp. You want to scalp with a sell. Now, if you want to scalp with a sell, uh, drop down to 15 minutes time frame. What can we see there? So if you want to scalp with a sell, let's see what we are seeing there. Is it possible to scalp with a sell right now? Remember, the dominant trend is upward. AY, you say you want to scalp with a sell. Okay, Mr. Kenny. Kenny, say you are already there on a sell. So if you want to scalp with a sell, it's actually a short trade, right? It's a short trade. Scalping is a short trade that must have a stop loss and a defined target, right? A defined target, okay? So what can we see here? So the market has broken this structure. There's a structure right here. Some of you are still dropping some comments. So the market has broken this structure. So the next level to target is to target this particular area. Is to target this area, okay? So you should sell to this area, then buy from that point. Sell to this area, buy from. But if you're doing that, then your stop loss have to be very close, very tight stop loss. Use it as your stop loss, right? If you're scalping, use it as your stop loss. Then one can be able to enter a sell right now. Then you target this level, right? So you target this level. But now, if you scalp, you're scalping against the dominant trend, okay? Now, but for the rest of us, yeah, that want to be a little bit less aggressive. So you just wait until the price gets to this level, right? I'm very optimistic the price will drop down to this. So if it drops down to this level, this is a very good area. So you do your buy from here, then of course you target the next high. Okay. So that is you scalping in the direction of the dominant trend. Okay. So this is scalping the retracement, right? So you can scalp the retracement because the market is trying to do a correction or a retracement. So if you do a sell, you are scalping the retracement. And you know it can turn at any time. So, but I will always love to scalp the direction of the dominant trend. Okay. So that if I am wrong, if the trade is showing negative, it will not stay for too long. Okay, Mr. Ken, say you're scalping with a little profit already. Okay, that's fine. I'm sure that will be a sell. So we have been able to do Euro USD, USD, and gold. Now let me look at the comment section here and take some of the questions. So Mr. Adeyemi, then you're the first person there. You said we should look at US 2000. Okay. So after US 2000, look at other instruments that you have. So this is US 2000, guys. US 100. Okay, so we should look at US 100. So guys, this is US 2000 here, as you can see. On the H4 time frame, what can we deduce? The person that asked for this US 2000, that's or uh, what's that your name now? Okay, the same Oluwaseun. So US 2000, a lot is happening here, right? So for last week, it was a downward trend. Week before last, it was a downward trend. 3 weeks ago, a downward trend. Come on, guys. What about today? Today, the market is still the second to the last day of the trading week. That's today, right? Thursday. The market, the week is almost bearish. Okay, it's almost no, it's bearish. I mean, the week is almost closing bearish. So it means we should be having more of a sell trade than a buy trade. So it looks like Mr. Shehu, you are really making this guy. Mr. Shehu, it looks like you are really making this guy. You are really making it. So let me. So more of a sell trade, right? But on this H4 time frame, let's look at for our areas of support. Now, does it work? Yes. Look at the market bounce here. First one, second one, the third one, fourth one, the fifth one. So it's not something to ignore, sir. It's not something to ignore. Since the market has been obeying it. So the first time, the second time, the third time, the fourth time, the fifth time. So let's now drop down a little bit more, maybe 1 hour time frame. So guys, this is it. And do you know this instrument is actually on a range. This is a range. This is a range market, guys. Beautiful. But then you have to be warned, this area is not area for small money, okay? It's not area for small money. If you must trade this guy, call your account officer right now and say, I want to top up my account. If you're having 200K, call your account officer and top up your account. It's not area for 200K. Even if you have 500K, use 0.01. So this is actually a sell, right? It's a sell trade. Now, but we are seeing a very small area of support there that must be broken. That must be broken. And the market is already giving us some signs, some movement that area is going to be broken, okay? So guys, be rest assured that if the market drops down to, if US 2000 drops down to 2003 around this area, 2005, 2003, 2004, it's going to be rocking another level of support. A support that will not let it go except it breaks it. Now, if the market breaks it, then of course we continue our downward week. Sorry, the bearish week, the downward trend continues. But for now, we are seeing some level of opposition. Okay, so you only sell at the resistance here, then you want to buy on the support, right? But if I were you, I would not even buy on the support. I will only sell at the resistance. So sell at the resistance and also sell when the level is broken. So we have a level of spring that the market has already done a spring here. So we'll be expecting the market to move on. Of course, it has already done that already. So it's only a sell. It's only a sell. Okay. So for now, the market is already close to this level. I don't think you want to enter an instant sell right now because it's already close to this level, except you want to just take the risk and enter the sell. Otherwise, you wait until the market rocks this higher level before you sell, or you wait until the market breaks this support before you can sell. So it's only a sell, and a sell that I'm seeing there, not a buy. So guys, I think the next instrument we're asked that was suggested for us is USD-JPY. In fact, two persons suggested USD-JPY. Mr. Oluwaseun and Adeyemi. So let's look at USD-JPY real quick. So if you have the instrument you are trading and you want us to look at, quickly suggest it. We'll be here to take it for you. USD-JPY, guys. So this is USD-JPY, very quick on the H4 time frame, as we always do here. H4 time frame. So this instrument is still rocking a downward trend. Let's see. Now, but technically speaking, we have seen a shift. So let's draw so that we can be clear on that. So let's just use this leg. So this is the leg that took out this low. Okay. So let's use this leg. So we have a push to the downside there, retracement to the upside, impulse to the downside again, retracement to the upside, as you can see. So impulse again to the downside. Can you see that? Then of course, now this is actually a shift. So we have seen a shift, guys. You have seen a shift. So the market have given us a shift. Now, but before that level, we can use this level, right? We can use that level because this is H4 time frame. So we can use that level there. Movement again to the upside. So we have seen a shift. A shift, I mean, is the market has actually shifted to the upside, technically on the chart, as you can see. But if you're seeing on the much higher time frame, like daily time frame, market on that higher level, the market is still downward. But for we day traders, and of course, some level of swing traders here, this is actually a shift because the market has broken this high, right? The market has broken this high, it has violated this high. Okay, so this level, let's zoom in a little bit more. USD JPY, guys. So that seems to be some level of support there. Okay, now let me drop to maybe 1 hour time frame. Let's see what 1 hour will tell us. So in 1 hour, it's looking much more even clearer and easier, as you can see. Clearer and easier. So if we have a good reason to buy the dollar right now, this will be a very fantastic reason to buy. I'm telling you, this position is very sweet, very sweet. You place a buy, you use this level as you take profit. Sorry, you use this high as you take profit. You use this level as your stop loss. Very beautiful level. Oh. Now, do we have a reason to enter this buy? Can we trust the dollar? Let me check the USD index again. Let's see whether the dollar is trying to show some level of strength. I think the dollar is trying to come up there. The dollar is trying to come up there. So it's. I think I mentioned earlier that this is one level that the dollar will have to smash, and the dollar is almost getting there to smash it. So for H1 time frame, the last 3 hours has been bullish. Okay, the last 3 hours has been bullish. Just that the yen is also. Hmm? The yen is also showing some level of strength. Okay, so these are the two levels where we can use as our stop losses. One level there, second level there. So this may not be a bad trade to take after all, right? Since we are seeing some level of strength in the dollar. Now, trading what you see on the chart, this may not be a bad trade to take, guys. May not be a bad trade to take. So that's a buy there. Now, why am I taking this trade? It has a very good risk to return ratio for me. Okay, so this is somewhere around just 30 something pips there. Then a take profit of now this is a wide one. Okay, this is a wide one. This is an aggressive entry. It's not a conservative because we are entering very early. So we just cited the shift and we are trying to take advantage of that. We cited some level of momentum which to the upside. So that's here on the USD JPY there. Stop loss and take profit in place, guys. Let me check the chart room again so that we can analyze some instruments there. You say we should do US 100. Okay, D30. Ha! Lovely D30, guys. I love that instrument. I don't know why got to M. So guys, D30, this is D30, guys. On the H4 time frame, what can we see here? Somebody mentioned D30. Let's look at D30. Let's do D30. Now we have done US 2000, right? Now we are looking at D30. So on the H4 time frame, it looks quite confusing. But anytime you open your chart and it's looking quite confusing like this, you just go to straight to your rectangle to try to connect the highs or the relatively equal highs. Then gradually the thing will start making sense, small, small. You try to connect these highs together, draw it to the future, make it big there. You notice that the market now has the level it has to play. So the market has to play around these areas, right? So these are the areas the market would like to play around. Just imagine doing this before now, okay? That means the next time it got to this high, now look at this particular level. Let me zoom in so that you can see. Look at this particular level. Just imagine doing this when the market was here, I think some couple of days ago. When the market now moved down, move and touch here, this would have been an opportunity to sell. The same things are, if the market move and touch inside this area, I'll look for opportunities to what? To sell. What about your opportunities to buy? As simple as that. So, in 15 minutes time frame, let's get more detail because the lower time frame are for more details, right? So if the market move inside this area, if market move inside this area just like it did here and here, I would like to sell. I would like to sell, okay? But right now, what is the market doing? The market is rocking a very small level of support. So would you like to sell on that support? My advice is no. So if you must sell, okay, stay on this instrument for maybe for a couple of minutes or for a couple of hours. If the market breaks, if it breaks this level, then you want to pick your sell. Take note, guys. So we are streaming this live on YouTube, okay, and we are recording it there. Now, if you miss anything, you can go back and check again. You can go back and check again. If the market breaks this level, guys, then you want to enter your sell. Otherwise, you want to do the waiting game. So I want to sell at this high here, right? This is the high I want to sell. But for today, if market breaks this level, then I would like to enter a sell. So for now, you should do nothing. Or you want to enter a buy. I would not like to enter a buy after seeing the market giving us the for the last 30 minutes it has been selling to the downside. It has done a bearish engulfing there. So I wouldn't like to enter a buy. I would like to enter a sell, but I want the market to break this level, this local level of support. So even if you draw it towards the left hand side, you can see that level has been respected, right? That's been respected. So once the market breaks this level, then I would like to do a sell. So if the market can be, so guys, if the market can be able to trade just below this level, then I would like to do a sell. Otherwise, right now, we'll just wait and see what the market would do, okay? But right now, from what we can see, the market is already pushing downward with red candlestick. That means there is a very high possibility that the market can be able to break this level. So if it breaks level, guys, all of us should enter a sell. But then this is DE30, right? It's not an instrument for 100,000 naira. So I mean 100,000 naira capital. So you may want to do a top up of your account, top your account into 500, 1 million naira, so you can be able to ride and of course squeeze out the juice from this instrument. So you said we should. So for today, we are not really taking much time on each of them so that we can be able to cover a lot of instruments, right? So we have looked at USJPY and we even placed it on that USJPY. We look at D30. Now let's look at US 100. Okay, you just pasted that one right now. US 100. So guys, US 100 real quick. So Mr. Emmanuel, you have question, drop it for me. If you have question, drop it for me. Okay, don't just raise your hand, drop the question for me. So US 100. So US 100 real quick. US 100. So guys, this is US 100 right here. Let's look at what the guy is telling us. So those of us trading US 100, yeah, you have your you have US 100 right now. So let's look at what US 100 is telling us. So US 100, now the first thing you want to do, put it on the H4 time frame and look at the dominant trend. That's how you do it. Put it on the H4 time frame and look at the dominant trend. So once you put it on H4 time frame, each of these columns is activity for 1 week, 1 week, 1 week. So for the last 3 weeks, first week, second week, third week, even this fourth week, this instrument has been going down. And I hope you have not seen a negative trade. Come on, guys, you cannot not see a negative trade here. If you try to not see, man, then you just end up topping your adding more money, more money, more money. So you don't have to not. So have a stop loss such that if you are wrong, it knocks you out, then you take the right direction. Just imagine you place a buy, and of course, up here, and you were wrong. You take the loss, and you quickly switch over to sell. Then you should have been making the profit, right? That instead of just holding that buy and holding it, and be praying for the thing to turn. Yeah, the market does not respect that. Okay. So what do you do, sir? Now the the market is going down from what we're seeing. Now, 1 hour time frame, let's look at but for now H4 time frame, let's reduce some of the things we can see here, right? So the instrument is largely on the downward movement here. So this is a level of support that the market has established. So that means this market may be trying to smash this level of support, right? So this one level of support we are seeing right here. For this week, the market is still trading below the opening price. That's a sign. That's a sign. The market must have tapped the liquidity that is resting above here, offer a premium price to go down. Okay, so 15 minutes time frame now. So I would like to sell, but I would like to see some level of retracement to the upside before selling. So where am I getting those sales from? Those sales are gotten from the H4 time frame. I say I would like to sell. Where am I getting it from? So there is a bullish order block here. This is the bullish order block, right? This is a very beautiful one right here. How do I mean by bullish order block? Bullish order block is simply a two candlestick pattern, right? So this is a bearish candlestick and a bullish candlestick. If you do candlestick maths, 1, 2, 3, they are all, this becomes, this three bullish candlestick becomes 1 plus 1 plus 1 becomes 3, right? So this three candlestick becomes all bullish, right? Big enough to engulf the bearish candlestick, that becomes a bullish engulfing, right? So that's a bullish engulfing there. I see that as a bullish order block because the market came down right into that area, test it, and zoom off again, okay? So that becomes a valid area, a very strong area of support for us. So drawing into the future, this is what it looks like. So to show that that order block is working, so you can see carefully that the market is trying to respect that area, right? The market is trying to respect the area. The market is trying to respect the area. So it simply means I will not want to sell here. That's what it means. But don't forget, the higher time frame is very, very much bearish. That means I'll look out for a premium price to sell. So the first thing we want to do is we would like to use the opening price of the day. And of course, some mini levels of resistance there. So I want to say, guys, and I'm not selling immediately because the market is currently rocking an order block, right? So I will look out for these areas to sell. So if the market comes inside this area, guys, then I would like to sell inside this area. Inside this area. So you want to take a screenshot. These areas are the areas for me to sell. Now, this area can also be extended into the future. The right-hand side is the future. So this area can still be extended. So US 100, we are not selling immediately right now. Why? Because we are seeing a support, and that support is not just an ordinary support, it's an order block. So now if the other block is broken, because this market can actually do that. If the other block is broken, because we are seeing that other block on the 15 minutes time frame, if it is broken, now it means we are not in the trade, which is very good. Then if it's broken, then that is when you may want to continue your selling. Otherwise, you just wait until the market gives you a better opportunity to sell. Just imagine waiting for the market to come up into this area. It gives you a much premium price, a better price for you to sell. So guys, thank you very much. I think we've been able to cover a lot of instruments right now. Uh, why? Because we did not really spend a lot of time analyzing one. So join us tomorrow for another exciting section. You place a trade, make sure you have stop loss and take profit on that trade. Tomorrow will be another exciting section, guys. Join us again for another exciting section. Bye for now, guys. So my number is 090. Let me drop my number so that you can reach out to me. 090-2626 090-2626-4507. 090-2626-4507. Emmanuel is my name. Call me if you have some questions, some one-on-one question, Nicodemus question. Thank you very much, guys.